topic is going to be the Signature Guaranteed Universal Life Insurance reprice that came out in January. We'll talk about the product as well, but we wanted to be able to demonstrate to you how the product's improved from a pricing standpoint and the like, and we'll go through all of that today. So thank you again for joining us. What makes Signature GUL unique? Guaranteed lifetime death benefit protection is the first thing that makes this unique at one of the lowest possible costs. And plus, we have 3 guaranteed periods that allow the insured to cash out their policy. So, so many times things change in someone's life as their life evolves. A lot of times they're taking out insurance in their 40s or early 50s when they have kids to educate. They got a mortgage on their house. They have retirement to take care of. But yet 20 years later, by the time they're in their mid-60s to mid-70s, by that time, the kids are typically out of school and out on their own. The house is typically paid off, and they're more ready for retirement at that point in time. And so if there isn't a need for the death benefit at that time, why not repurpose that money? Because you're going to get your premiums back all free of tax, because you use after-tax dollars to fund a life insurance policy unless it's in a qualified plan. And because of that, then you will get back your premium payments tax-free, because that's your basis in the policy. Your basis in a policy is equal to the premium payments. You get those back. There's no taxes, and you can reposition that money in a SPIA, vacation home, whatever they might want to do with it. So it gets very important that we can offer to cash out their policy after their need has diminished, so that they can then be able to repurpose that information, that money. And that happens in the 15th, the 20th, and the 25th policy anniversaries, and we'll talk about that in just a minute. We also have in this contractual late payment forgiveness. Now, so often a carrier may say they have late payment forgiveness, but unless it's in the contract, at any time they can say we don't have late payment forgiveness. Ours is in the contract. And the reason we put that in the contract and made it prominent is the fact that unlike an IUL where you're building up cash value and you are putting in extra money into the policy to create that cash value, with the Signature Guaranteed UL policy, what you're really trying to do is say, how little cash can I put in to maintain this guaranteed death benefit? And that's how we structured the product. So it would be our lowest priced permanent policy, and so it would also just be someone who's looking just for a death benefit. But with this cash out rider, not only can you get a death benefit for the period of time you want, 15, 20, 25 years, you then are able to cash that out with a full surrender of the policy in exchange for a partial or full return of premiums. And this is added to the policy, no additional premium cost, but you have to be issue ages 18 to 70. Additionally, we think we have some of the best accelerated benefit riders in the business. We have disability waiver of stipulated premium and children's term rider. But those ABRs, most people have a terminal illness ABR. Some people have a chronic illness ABR, but very few people have the critical illness ABR, which really is a key there to having that critical illness as well as the chronic illness and terminal illness. So we have that on this policy available to you. Now let's look at the key facts. Minimum face amount, $25,000, guaranteed minimum interest rate, 2.5%. Issue ages 18 to 80 for non-nicotine, 18 to 75 for nicotine, and then remember 18 to 70 to be able to obtain that lifetime income, that cash out rider. So when we look at premium bands, we're looking at, you can see band 1, 2, 3, 4, and 5. We changed that so that, 250 would start a premium band now. And now let's look at the underwriting classes. You can see the different underwriting classes for accelerated underwriting from $25,000 to $249,999. You can get standard non-nicotine, standard nicotine. For above $250,000 with full underwriting, you get preferred plus, preferred, standard plus, standard. And of course, it can be rated as well with flat extras and the like. Now let's talk about that cash out rider. Now it's separated into two ways here, from death benefits from $25,000 to $249,999, and any death benefit over $250,000. And keep in mind that all of these have a death benefit cap, and everybody in the industry has them. I think it's so that they can price it as low as they do. If you had an unlimited cap, they may have to just price the product higher, and one of our keys is to make this the most economical, permanent policy that we can provide our clients. And so with the $25,000 to $249,999, we've got a 45% cap, and that's 45% of the initial death benefit. So if you had a $100,000 case, it would be $45,000 maximum premiums you could get back on that. But with death benefits above $250,000, we have a 65% cap on the death benefit. So for a $500,000 policy, that's a $325,000 cap on premiums. Now, how are you going to get above the cap? Well, probably you're going to guarantee the policy for a longer period than 100, at least up to 105 or more. And you probably have an older insured, maybe a rated insured who's higher rated, and that's where you could get above that, and we'll show you an example in just a minute. But 15th year, you can get back up to 50% of your premiums, and 20th and 25th year, 100% for the $25,000 to $249,999. For above $250,000 and above, now it's 65% of the death benefit in year 15, 100% in year 20 and 25. And probably the only time you're really going to ever get up to the cap would be in year 25. And like I say, that's only if you're rated older and or have an extended death benefit guarantee. Now let's take a look at some of the highlights. And I want to stress that in any given age group, you're going to find some premiums that decrease, like in 49 to 50, up to a 10% decrease in premiums. For most non-smoker classes, you might get some decreases. Smoker was just left alone, but it was left alone because we were already very competitive on smoker rates. Ages 60 to 70, up to a 20% decrease in premiums, and yet you may have a client who falls into a cell where there's an actual increase in the premium. These are very general, not specific. Issue ages 71 to 80, 10% decrease in premiums, and issue ages 18 to 39, we did a 5% increase in premiums. And the reason we did is we felt that we were already so competitive and so far ahead of the crowd, we were able to increase premiums 5% and still maintain our competitive position. So, all face amounts of $249,999 and below, there was an average of 10% increase in premiums. And again, we were already very much ahead of the pack, and so we're still in a very competitive position there. Now, other changes, no longer need an illustration in lieu of form requirement. There's a new mortality table and reserving under the new 2017 CSO table that everybody has to go to by the end of this year. And relative to the illustration, we still recommend you run one, because if we don't have an illustration and something changes, we have to NIA it rather than saying, okay, here's what they wanted to accomplish. We'll go back and rerun it and send them the policy rerun at the higher rate there. So what's not changing? Commissions are not changing. The target premiums are not changing. The product features and riders are not changing. And again, the competitive short pay scenarios where we're very competitive, those didn't change at all with the new product. Retention limits, those increased. In addition to the reprice, we increased retention limits, 0 to 75, a $5 million retention limit, 76 to 80, a $2 million retention limit, and 81 to 85, a $1 million retention limit. And as you can see, policies issued in New York by us are by American National Insurance Company of New York will be reinsured with American National up to these same amounts. And so we'll be able to retain more, and we hope that shows up in our pricing and other places like that. Okay. Accelerated benefit riders. They provide the option of receiving either a partial or a full accelerated life insurance benefit if the insured experiences a qualifying medical condition. So you can do a partial, you can do multiple partials a year. If the situation gets worse, you can come back, or if it need more money, can come back and do another partial. So you can do partials, or you can just go for a full acceleration. And a lot of times people start out and they ask for the ABR, but they still haven't gotten as sick as they're going to get, so they take a partial, then they may take a full later when their condition worsens. And of course, you're going to get a higher benefit for a terminal illness than you would a critical and chronic illness, but sometimes things come as a critical or chronic illness, and they wind up being reviewed and looked at, and life expectancies and the like, and they turn into a terminal illness review. These riders are offered at no additional premium. The accelerated payment will be less than the death benefit because it's going to be reduced by the actuarial discount, and an administrative fee up to $500, but we've only charged $250 for those administrative reviews. Now remember that we allow signature term to be converted to any American National product, including our flagship product, the Signature GUL. Now, some of our competitors offer a limited portfolio of products that you can convert to, but we tell you, you can convert to any of our permanent products, and you can convert ART term to 10, 20-year term as well. So gives you a lot of flexibility with your clients. If they want to start out with term, we can give them some credits and conversions to some great permanent policies as well. Now, I mentioned previously, contractual payment forgiveness allows premiums to be paid up to 1 full month beyond the monthly deduction billing date without negatively affecting the lapse date. Now, if someone paid their premium 1 month late each month for 5 or 6 years, that could be enough to crater that policy and make it lapse. And so by having that in our contract, someone can do that, can pay that at 1 month late, and still be able to maintain that policy and not have it lapse on them, because they'll be credited with the premium getting it at the exact time we were supposed to, rather than 1 month late. Now, top reasons to sell it: flexible, guaranteed death benefits. It's the lowest cost death benefit you can purchase in many age groups in the market. It's got guaranteed access to cash in the policy, but also from a cash out rider perspective. It's got competitive premiums up to age 70. We didn't used to be competitive from 60 to 70. We certainly are now. We've always been very competitive on our short pays, and we're still very competitive there. We have term conversions to this flagship product or any one of our other products. We have the accelerated benefit riders, including the critical illness rider that so few companies have. We have contractual late payment feature. We talked about that. No illustration is required on this product. Now it's time to take a look at why we redid the policy and how it worked out for us. Here, let's look at, we just picked a male 50 preferred plus, a male 60 preferred, and a male 70 standard, just so that we could show you some different, competitive layouts. And as you can see, let's start with the 50 male preferred plus. We're number one in that space. Right behind us is Symetra without the return of premium, and then about $700 more is Symetra with the return of premium like we have. American General, which has a return of premium, was about $900 more. And then if you look at Pac Life, who has a return of premium, they were about $1,100 more, or $1,050, and Nationwide about $1,100, and then Mutual of Omaha was about almost $2,500 behind us. When we look at the 60 male preferred, again, number one in that space with the return of premium. You see the Penn Mutual without the return of premium, Symetra without the return of premium, and then the one with the return of premium closest to Symetra, which is almost $1,000 more than us, $900 and some more. Then you look at Pac Life with the return of premium. They're over $1,000, well, not quite $1,000 more as well. And then American General is more than $1,000 more. Same thing with Nationwide. And then if you look at Mutual of Omaha, that they're over $4,000 more than us. Going to the male age 70 standard, again, number one in that space with return of premium. The next return of premium would be Pac Life, and they're about 2860 behind us, 2,860 less, more. Symetra, again, about the same, a little bit more than that, and same thing with American General, same thing with Nationwide, about more than $4,000 more. And then you have Mutual of Omaha, which is approximately $10,000 more per year than our premium for a male 70 standard. Now let's take a look at where we ranked with our old product with the competition. As you can see, at 55, we were still 1, 2, 3, and 4 there. At age 60, we were, getting a little up in there, 9 and 10. Age 65, up there in the 13s a couple of times, still had a couple 1s, 2s, and 3s, and 4s. And then age 70, we were at 13, 14, 16, 18 ranked, and there on. And I just covered the males, but the females are very similar as well. Let's take a look at where we are today with the competition. So keep in mind there we had some tall numbers from 60 to 70. Now you can see 55, 1, 1, 1, 2, 3, 60, 1, 1, 1, 2, 2, 65, 1, 3, 3, 4, 5, 60, 70, 1, 1, 1, 3, 4, and so you can see we dramatically improved our rankings in all classes, whether it's preferred or standard. You can see we dramatically improved there from our numbers that we had prior. So the product is much more competitively priced from 55 to 70, which was our goal. And so we're much higher there on the rankings. So, okay, let's take one look at the cash out rider comparison. Again, that becomes very important. You need to get down in the weeds to know what's best. And so what you have is the companies that have the cash out rider. You can see what they call them. A couple of them, Symetra and Nationwide, do have an additional premium for those. The cash out periods, American National 15, 20, 25, Mutual of Omaha 15, 20 through 25, AIG years 20 and 25, Symetra 20 and 25, Nationwide 15 and 20, and Pac Life 15, 20, 25, and 35. That's all great. Now let's try to break it down a little bit more and look in year 15 what the amount is. And for us, it's 65% for in year 15, 50% for face amounts under 250. Mutual of Omaha is at 50, Nationwide's at 50, Pac Life is at 50, and 25% for face amounts under 250. Then let's go to year 20. Now we're at 100%. Mutual of Omaha is at 100% for years 20 to 25. AIG 50%, Symetra 100%, Nationwide 100%, Pac Life 75, except for under 250 where they're 50. And then year 25, just about everybody's at 100% on that one. Pac Life is at 75 for under 250. But the key here, too, is the death benefit cap. We've got a 45% cap for amounts up to 250. For 250 and above, we're at a 65% of death benefit cap. Mutual of Omaha has a 50%, AIG 40%, Nationwide 40%, and Pac Life 40%. So having that higher cap, you're going to be able to pull more money out of our policies, even though the premiums are all going to be lower than these other folks. You're going to be able to pull out more money out of our policies in year 25 because of those higher caps. Now this is our disclosure. You know, these examples are for illustration purposes only. You can see all that. Then this is our accelerated benefit rider notice. Note the small type because of how much notice there is, so you can take a look at that. And then this is where you can go. You can call our field support center at the 888-501-4043. They can give you illustrations. They can give you updates on your cases, all kinds of things like that. And you can look at and that's their email there, imgfsc@americannational.com is the Field Support Center's number. And then you can go to our website and see all this information, img.anicoweb.com, ANICOWEB.com, and you can find all that information there as well. So we recommend you go there. There's a copy of this presentation there, although if you wait till tomorrow, we should have this particular presentation up there, and you'll be able to listen to this one again. We're just trying to update the numbers in there, the competitive numbers. But you will find that available on the website. But we thank you for joining us today. Appreciate your taking time to give American National some of your time. We think with this product you can't go wrong. We hope you'll make it a part of your inventory. We thank you for your time today. Have a great day.